Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about navigating the market, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
You can't really trust the government numbers. Sad. They constantly revise them. I usually revise them much worse than they were when they first put the numbers out. I shouldn't even say usually. It's almost exclusively always that they revise them worse than when they originally put them out.
You'd think we'd figure it out and stop looking at the preliminary numbers because they're always freaking wrong, which means to me that somebody's cooking the books. They're defending their narrative.
Yes. I don't know what other conclusion you can come to. So it doesn't matter that much to us. It's just a little bit off-putting because you want to believe that you can look at reports and then do some sort of objective analysis and get a true picture of what's going on out there, which you can once you understand all this stuff and once you accept it. But that's the hard part, is like convincing people. And then once you show them over some time and they say, oh my God, you're right. And then you make the mental adjustment in your head, then it's a little bit easier to understand what's really going on. And of course, in our particular craft of trading zero DTE and using volume profile and adjusting according to the long-term volatility and short-term implied volatility, we just have to have a generic or general sense of what potential volatilities that are coming and what the difference of that current volatility is to the most recent volatility. I want to point that out, that it's not so much the level of volatility, where it is, because we know how to adjust based on whether it's super low or medium or high in a generic sense. But each day, the level of volatility relative to the previous day is also very important. For instance, this morning, the VIX was up a marginal amount. It went up from like low 12s to mid to high 12s. Now, that may not seem like anything because it's still well under inside the zombie land zone, right? But it is significant because it really comes down to the difference between what it was in the prior market, the prior session, and this session. That is more important than the absolute number. And it's also that way as you're going along during a day, how the volatility changes. You have the big picture context and you adjust to that, but then you have to then play the small picture. A good example of that, and one way that I can discern whether or not there is a change, one easy way is you can look at the VIX pre-market and then see whether it's gapped up or gapped down and what's the percent of that gap as a total of the number. Another way you can do it is you can put on a straddle or a big ass fly, a 50 wide fly at the money, and then get a measurement of the debit for that fly. Normal, or usually unchanged, is somewhere in the area of 31 to 33, I guess. I said 32, but it's somewhere in that low to mid 30s range. Anything below that is indicating some energies that are, or expected energies coming into the market. So when it gets down to 27, I would consider that moderate volatility. It gets down to low 20s, I would say that's slightly high volatility. And it gets below that, and it's saying the market is expecting something much larger than just slightly high or elevated volatility. You don't have to get into the weeds and try to put or dial it in as if you have exacting control or understanding where it is. I'm just giving you ballpark that seem to make sense.
Thanks for watching guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.